Hi and welcome to Big Picture Live, he says, because I'm doing this in front of our trading room at the moment, but not quite so live for some of you that are picking up on the recording on YouTube, but whatever. Okay, so let's have a look at the individual currencies here and where they are and what's happening. Starting off with the US dollar, I'm just going through some high level analysis as ever with a big picture. US dollar base rate 2%, now expected to see a cut in that. Now it was last week 43% chance of a cut. Now it's up to 74%. It was as high as 88% late last week, but either way it looks like the potential for a rate cut in October is increasing when they meet towards the end of October. I'm just trying to remember the date of the meeting. I think it's the 30th of October as I'm looking at it on a piece of paper. Yes, it's the 30th. So that's a couple of weeks away yet. That may sort of run up and down a little bit in between them, but the figures for the US are not coming out particularly wonderfully. I was looking at the summary of last week, and lots of negativity kicking through there. Chicago PMI on Monday was down. Later in the week we had the manufacturing data went below the 50 level, so it's gone into contraction. Later on we saw services go into contraction. Oh no, it wasn't. It just dropped a lot to 52.6, but as I said at the time, it's dropped, and it represents around about 80% of the US economy, so big figure there. And then of course we saw on Friday, okay, the unemployment rate dropped to 3.5, which is a 50-year low, which everyone will have you thinking yee-hee-ah, but or yee-hee-ha, whichever it may be. But in reality, the average earnings dropped from a 0.3% increase to zero. So inflation, earnings inflation fell with new jobs. The actual new jobs were less than expected. They came in at 136 versus 145. So there is more and more proof in the numbers that the data is getting softer for the US, which in turn may see some weakness coming through for the dollar. However, you've got to bear in mind that when the US tends to go into recession or slow down in growth, it knocks on all the way through. So where's the money going to go for safety? Well, probably into the US dollar. So I see asset managers have been picking up their positions, increased it not massively, but a touch. The hedge funds come off a little bit there, but overall bullish looking. From a weekly point of view, we're still up in a bullish trend here. The daily not quite so. Eurozone, well, I've talked about this time and time again. It's still in a precarious place, and in terms of its economy, it's certainly well behind the US curve. Never got anywhere near back to a strong place. The financial easing or quantitative easing, etc., is not really helping the situation. The financial stimulus even doesn't seem to be likely. But we've got some meetings this week, which the outcome of which may see things change. We've got the Eurogroup meetings, the ECB meeting minutes coming out there as well on the 10th, so we may get a few more bits that we didn't notice in the first place or Draghi didn't speak about. And then you've got the financial ministers from the eco area meeting on the 11th there, so plenty to give a bit of volatility maybe at the end of the week there. What's the euro doing technically? Well, technically long term it's in a downward trend. It's a bit choppy where it's sitting at the moment. It's just on a spot where it could get a little bit more traction because of the data that's been coming out from the US. Everyone's beating up the US dollar at the moment, and at these times I sort of watch carefully because you don't want to be standing in the way of the rail cart as it's coming through. The euro, the pound, etc. Well, the euro particularly may just sort of get a bit more of a rally. The yen was showing good signs of strength against the US dollar, but at the same time, just be aware. The pound, well, of course, Brexit holds on. The big problem. The big problem is the big news there, and we're still waiting to see what's happening. It's to and froing what's likely to happen. in terms of interest rates coming out of it. Realistically, cuts might be coming not because of Brexit, but because of the very global slowdown that's kicking out there. The data for the UK is equally pretty soft as it is, or I should have said for Europe, as I was running through there. I think I may have actually. Anyway, so choppy on the dailies here, very choppy on the dailies, pitching up and down. Certainly still in a downward trend on the weeklies. Yen, no changes are really expected to come out. Whether or not they were looking for the tax changes in tax and everything else to show with their hand. No significant news out this week. We've seen a little bit of strengthening come through. Asset managers have maybe even taken a bit off their short positions, but so have the hedge funds, so of their long positions. So it's neutralised itself in real terms. Trend is moved back towards being probably negative on the dailies there with the divergence, which I'll show you later. Aussie dollar, Australia, New Zealand dollar, you put them together in some respects, both struggling from the data that's being released there. I've not seen any good data coming through, particularly for New Zealand. No positive surprises, so I can only see those two reducing. I've left here 0.25% cut is expected. A further 0.25% is expected, but that may be into next year now. But they did reduce the interest rate by 0.25 as forecast. Now that did see the market rally for a little while, but it's not holding on too well today. Canadian dollar. It was hawkish in September. I said it hasn't really changed too much. It softened up a little bit. There was less than a 6% chance of a cut in October. I'll have to have a look at that number and see if that's changing too much, but we've got a bit of time before that's due to be reviewed next week, I think, or the week after. So not much to be happening there. We got the employment data this week, so we'll get a bit of a grasp of what's happening there in terms of the numbers. It was holding up slightly better in lots of the numbers, but maybe it will just follow the lead of the US. New Zealand dollar, well, we've seen, as I say, softening. I would expect this cut to be this rate to be cut next time they meet. Pretty much, they'll follow the stance of the Australian Reserve Bank of Australia there. It is still at an extreme point on the asset managers, fund managers, on the sentiment there. Now, as I said a couple of weeks ago and last week, that's when the sentiment gets particularly strong, particularly weak. At some point, we see a turn here. We saw what looks like the faintest chance of a turn last week. It's still arguably in a downward trend though, but we'll talk about that in the technicals in a moment. But there's still a chance that we might just see a bit of a retrace in these currencies, maybe a few of these currencies. As I say, we're seeing it with the euro. May just see a bit of movement out of the dollar in the short term, but I would expect it to come back. S&Ps, I've not looked at the technical, sorry, that's not up to date. Of course, we're still looking at Chinese talks there, but the strength coming, once again, asset managers just reducing their huge positions slightly, and hedge funds actually increasing there slightly. Overall, the summary in terms of the currency pairs, I've moved this into the right order here. This is from strongest to weakest. Overall, looking at economic strength, sentiment, and the change over 3 months. So this is where we sort of sit there. Well, yeah, as I say, strongest to weakness. There's the summary. Let's have a look at the charts. So we'll start off with the Euro weekly. As you can see, still downward trend, trying to put the hammer in last week. As I said, it was doing its best. It's pushed up here, pushing up towards this 21. Maybe it will get through there and push up towards the 50, but still really is. I've put a sort of a chop, but it's actually trying to do something here. But in real, for all intents and purposes, it is still pretty much in a downward trend there. The pound. Get it up, there we go. Bearish pivot swing on the weeklies there. Last week it pitched lower into our bands there and just pitched up off that, looking like, well, it didn't really go particularly strong either way last week. We had a push up on Thursday, but gave most of its gains back. It's another doji day today. At the moment, it's a frustrating currency to be trading because of the Brexit situation, and maybe best not to trade it. Note to self. Okay, dollar yen. Okay, so dollar yen, solid old bullish engulfing, or bearish engulfing, sorry. Bullish for the yen, I'm thinking, bar there, but we've seen a bounce again here of the weeklies, and that's represented here. The range on this market is very, very tight. It has got the weekly pivot above there, maybe a draw back towards that, back towards the monthly. It'll be the key point. If it breaks beyond that, well, it's probably on at some stage for that daily 200, and it'll be softening again. It does seem today that it's a bit of dollar strength running through for some of these markets at the moment. Aussie dollar, it's divergence or no divergence. It's still hanging in down here at the lows. Let's just have a look at the MACD. There's a bit of divergence across from that low to the current low, but either way, looking a bit soft. It had its rally back towards, it still hasn't caught that monthly pivot properly. It could still come, but now if it turns around here tomorrow and starts pushing up through towards that 50, maybe it'll break the 50 again. It's done it before, and as I said, I do wonder if some of these currencies, including the New Zealand dollar, will get a shove at some stage. Canadian dollar, choppy as anything. I don't even really talk about this as an intraday trade. It's even as a swing trade at the moment, it's a tricky old one. It looked like it was going to be a bit of a bullish swing at one stage, and it sort of moved up into a certain level and then just pulled back again to its weekly pivot that stands. Bearish pivot swing put on the dailies there on Friday. Well, today it's just, as I say, pulled back off, had a little rally and pulled back off, so not a lot going on there. I would just be drawing trend lines across the lows there, or these more recent lows, and it may, if it starts seeing any strength coming through it, that would be the trigger. But as it stands at the moment, it's leave alone. New Zealand dollar. Now, this is last week we ended up with the hammer coming in here on the weeklies. Bit of a sell-off today, and it may be just too much. It may not be able to cope, but it's really just retraced back to its weekly pivot at the moment. There is potential that this could still, and from this week, somewhere around this weekly pivot, we might see an upward move back towards that daily 50. But again, it's in a proper downward trend at this stage. It's not really convincing that it's putting a higher low or anything like this in. Along with a lot of these markets, they had a little push up last week, which actually, if I bring the dollar index into play, if you can, it's there somewhere. There we go. Daily's dollar index pulled off last week. They're consolidating where it sits at the moment. Is it going to just consolidate, roll over, or are we going to see a rally? It's still looking a bit soft, to be fair, from those highs. Okay, that's the dollar index. We'll try. We'll have a quick look at oil here. I haven't discussed it really. There are meetings this week. Possible meetings this week to discuss oil prices, etc., and quotas, I'm sure. But what's it look like at the moment? Well, from a weekly point of view, bearish sort of looking. Line in the sand is around that 52. And I said a long time ago we may end up in a range of maybe $50 through to about 60, 70 maybe. And that's really what we're seeing here at the moment. There's no reason for it to do anything else. There is surplus out there if it's needed. From a daily point of view here, well, it continued for most of last week on the downside, pulled back to the weekly pivot. This week it's really maybe looks like it's got potential further downside. It just needs a point of resistance. Maybe the prior highs here. I'm looking at the key moving averages. Just need to see some sort of reversal, and that might be still a sell back towards $50. But I don't expect it much below that. I think it's the happy median, or medium even. Okay, and the S&Ps. Let's have a look at the S&Ps weekly point of view. So they've been doing quite well. They've recovered pretty well last week, having a little blip back up again after a gap down by the looks of things on the futures, but it's not showing on here actually. I did. Bar's closed. It's closing that gap up as I talk, so it's pushing back up. Potential for further upside. Whenever this starts getting a bit of a wobble here, people are looking to sell and looking for the short side of it. I think at some point weakness can come through there and we get a bigger correction, etc. Money will go where, and that's the problem. It hasn't got the big money doesn't really want to move out of where it is, because it's giving them some sort of return rather than no return or negative return. So if we push comes to shove and it gets that real sort of natural point of these markets are going to roll and there's a proper recession, we may see these markets roll over more, but until that point where it's sitting, I think it's just purely on the big money, just sitting there. Doesn't want to move, doesn't want to go into negative interest rates returns. So that's where we stand on all those markets. I wish you a great week. I've talked about what we've got coming out this week. Covered everything. There we go. Have a great one. Bye for now.